Hello friends, welcome to my channel. And today I wanted to do something different and more like a Q&A podcast with a trader in an investment bank, focusing on some generic questions that some of you have asked. Hello, do you want to say hi and introduce yourself?
Hi there. I've been working for about 13 years in this industry, in the trading side of the investment bank. Uh, yeah, this is not scripted, so I'm just going to be answering as it goes. So.
Completely freestyle. Okay, I have the questions in front of me. So first one, very juicy question. How much does a trader get paid?
To start with, if we say like where we begin as analyst groups, as in the first year pay scale typically starts from around 60K sterling to roughly 100K, 120K for the first, let's say, 4 years of your career. Again, this depending on bank to bank. I'm talking broadly the bigger banks of the investment banking. So anything from the bulge bracket part of the banks. So bulge bracket means mostly the US American banks, maybe some of the European banks like Deutsche, Barclays, as example. In the start of your career, most of this is pretty controlled. So your base salary ranges from starting from 60K-ish to 100K-ish for analyst associate. Bonus are typically on average anything from a third to the half of your base depending on your performance. You could get 100% base as your bonus, but typically that's on the rare side. And you may get some special contracts, but that's again in a special case. Further down the path, so once you get to the VP stage, i.e., 5 years of your career typically, that's where everything gets broader. Your compensation is more going to be dictated by your bonus or what we call a special salary allowances, depending on your past performance. And that's when things can get very wide. A good performance on average can be a couple 100K to those who are star performers can range into millions. Those are not disclosed usually internally or externally, but I don't think anybody should really focus on those numbers. Generally speaking, the majority of the people probably get in the range of, I would say, base salary plus 50% to 100% or a bit more than that is normally the majority. And further up you go, like directors and MDs, obviously, again, it's very, very much performance dependent. People talk about total compensation rather than base salary. So the notion of how big is my base is becoming less of importance compared to what your total comp is, which is driven by your bonus. So the answer is yes, you can get a decent payoffs in this day and nature where more and more the banks are driven by franchise rather than prop trading. So it's not the only industry that you can make a lot of money, but it is an industry that has the potential for you to make a good amount of money. But that shouldn't be your primary reason to join an industry. But we can talk about that later. So I will not dwell into each trader's lifestyle outside work because that is really dependent on that person. The stereotyping of the trader's lifestyle is probably valid to a certain extent in the 80s, 90s, much less so in since the turn of the financial crisis, mainly due to the regulation. A lot of things have changed. So, and all the other things that you probably don't want to see are things in the past. Regulation and ethics and integrity has really taken the front of the news headlines. So I would say trading floors are a lot more sedated. It's not as chaotic as in the past. That does not mean that people will not lose their temper when the market is volatile, when people lose money, or likewise that people celebrate when there's big wins in the market. More what's appropriate is that it is to be aware that the conditions of the work environment is a trading floor where everybody sits together quite tight. And the whole point of that is communication and ability to talk and know what's going on and feel the market. I feel what everybody else is feeling. So the lifestyle is very much opposite of a library. It's a constant noise, and you want that noise. You do want to hear what's going on. You do want to listen people's emotions. Some people get angry for losing money. Some people may get happy when they win, right? So it's knowing knowing that atmosphere and knowing what's driving the market. At the same time, you need to have a thick skin. So if somebody loses temper on you and the F word starts flying around, that can happen. Not often these days, but it can happen. And you just need to man up or, get on with it and move on. Likewise, if you get disappointments or excitement, it's how do you tolerate those emotions on the floor? And that's important. You cannot be somebody who's a bookworm and get too sensitive about emotions when people face different kind of challenges during the market. So that's important for you. In terms of the other type of lifestyles, but it's nowhere near as crazy as in the past. So I will just, if you think there's anything like Wall Street, that's completely wrong these days. Okay. Usually, how I think this approach is that is a two-way approach. Do you need to be born to be a trader? No, but you need to have born with certain qualities or intellect. And that's kind of like saying, can everybody be Einstein? No. Can everybody be a rocket scientist? Probably no. I mean, hard work does make up a lot of things, and I'm not saying that you can just have the natural talent and not work hard. That's definitely no. You always need to work hard. Trading is not rocket science, but you do need certain natural qualities, minimal understanding of the market, which that can be trained, right? But at the same time, psychologically, you need to be good. And I think that's probably more where certain people are born from. Resilience, ability to take pressure, and able to bounce back. Whether these can be trained, I don't know. I mean, I think some of that can be trained. I'm less of a person who thinks that you need to be born with those things. Most of them you can be trained. It's more like how long does it take for that person to be a good trader. Some may take years, some may take only a few months or few years. It depends. Every person is different, and every person has different styles. So I leave it there.
Thank you. I think the next question is very common as well and very popular question. So, what are the skills required to be a trader in an investment bank?
Assuming that you are going through the usual recruitment process, then you need to obviously tick the boxes of the HR assessment. That's number one. So anything they require, verbal reasoning, basic maths reasoning, like fast, quick decision making in a common sense way, those are important. In interviews, you typically get people who ask you commercial awareness, showing good, solid commercial common sense approach in assessing a case study,
And
a
teamwork.
business, a business case study. Teamwork, leadership, that's the given. Those are the basics. You can't escape that in an investment bank interview. You may wonder, why do you need leadership in a trading role? Well, as you get more senior, you do need to manage people. So it doesn't matter what you do, unless you're going to be a sole trader, which you're not in an investment bank. Then you better have some kind of teamwork and leadership. So those are important as well. Now, for the trading specific, i.e., when it comes to the role itself, you again need to have as I said, a resilience, personality. You need to able to learn without books. So the books provide you the solid technical know-how, which you do need to have, by the way. So not like you can just go blind and not read anything. There's a lot of on-the-job learning, but books are helpful for you to have that foundation. And then you need to have an open mind, because a lot of things are not written in a book. When I say that is, why would someone give out their know-how in a book for someone else to learn, right? So you need to discover your alpha, your edge, your advantage after you have formed your basic knowledge of market instruments. So anything for options, equity, fixed income, know all those basic stuff, right? How to price a bond, how to assess an option, call or straddle or whatever, or wall itself. So those are the basics. Once you understand those basics, then it's about how to learn on the job. So you need to be able to be a self-starter, self-learn. You need to be able to take losses as well as gains, but often to know why you make a loss is important and how you manage those losses. So risk management, or I call self-discipline, and managing your losses is probably the most important thing aside from how to manage your gains. I know it's kind of broad brush of how I explain things, but generally speaking, psychology is half the battle of understanding yourself is a big thing in the trading. The other half is your technical knowledge.
Any advice you can offer to people who wants to be a trader or change their careers to be a trader?
Okay. This question normally, I would say, comes from internally. Sometimes from externally as well, but mostly internally. Two sets of examples. One is for people who are working in investment bank already, or in another financial institution, not specifically trader. So they could be a broker, could be a product controller, risk manager, or quant, or somebody who works in numbers. So a lot of people ask that question. Now, some of the people I would say who typically make that move to trading will show an interest in the market. Those who want to be a trader, but I only find out literally like the last minute, will not make it. So you need to work on it constantly. It cannot be just I hope, I wish. You need to work on your market knowledge. You need to work on engaging with people in the market to find opportunities, but also express your views and show that you are actually interested in the market and actually have something to offer. Whether that's from your expertise, you can be a great analyzer of equities because you have an accounting background, or if you're a risk manager, you have a good way to manage risk, and you have shown yourself you can trade, even if that is what I call paper trading, or trading with your own money, to show that you can and have that self-discipline to trade the market. Those who just wish they are traders with a CV are very hard to prove themselves, and it's very hard for me to justify like, oh, why they should have a trading seat over somebody else who is younger and cheaper. So it's a big hurdle. Now there are some programs where they hire experienced people who don't have a trading background. That can work as well, that kind of route. But again, it goes back to the basics. You need to have the passion for market. You need to demonstrate that you like to trade, or so all of that is quite important in terms of how you express yourself and your interest towards that career, and including the people who are outside the investment bank, some of them who are brokers or not exactly in the same profession. If they can prove themselves they are very good traders with some kind of track record of their PA trading, personal trading, that is. That's one route as well. May not be a bank, maybe some kind of a prop house, maybe. But generally speaking, you need to work on it consistently, and it's not like you can just spontaneously apply. You need to work on that. And generally speaking, those who do that and show they have done the hard work behind the scene to show what they can offer can make the move. But it is hard. I'm not saying that is easy.